Hello everyone, this is week 5 in finance and I hope everybody had a good weekend. I actually got to spend some time in Boston this past week with the College Reading and Learning Association, so it was good to talk to some of my colleagues out there and see what other schools are doing relative to helping students be successful in college. But anyway, this week we're going to look at chapters 10 and 11. Chapter 10, you're going to start to look at how we evaluate projects. In fact, the forum discussion this week, I just want you to post something that you remember from the past in which a company you worked for, or perhaps it was even your church, had to make some type of investment decision. This could have been that it was a new piece of equipment that the company bought, a new building. It could have been relative to advertising. In business, we try to acquire capital either through issuing stocks or bonds or borrowing from banks, and then we use those monies or internally generated funds to make decisions to help our business grow. And business is always dealing with change, so what is the right thing to do to try to make sure that we're going to be around in the long run? So I provided an example of Avila relative to residence halls and the decision that we made, but I want you to give an example in the forum discussion of something that you can remember in the past. It could have been something as a decision to advertise on television or newspaper, or it could have been purchasing a new piece of equipment to help to reduce costs, or a piece of equipment to help bring in more revenue. So provide examples and share your experiences with your classmates. In Chapter 10, you're going to look at some of those tools to help you make those decisions. It's going to talk about the payback period, the net present value, the internal rate of return, modified internal rates of return. And again, these are analytical tools to try to project cash flows, and based on those cash flows say, yeah, this is a good decision that we should go ahead and make this choice. Again, in business there's always risk, there's no guarantees, but by doing some of the grunt work and trying to project whether this is a good investment decision, that is, it's going to meet our opportunity cost, and then in theory add value to the firm, and you should see that reflected in the stock price. In fact, this week with Twitter, they just came out with an IPO, and I think on the second day it was up like 73%, which, if you think about it, is not necessarily the best thing for Twitter, because they're thinking in their minds, well, we could have issued the stock at a lot higher price, because once it sells in the secondary market, it's not Twitter that gets that 73% increase. It's the ones that own that stock in the secondary market that experience that value. So Twitter might be going back to their investment bank and, maybe you didn't do an IPO at the best starting price, but not always do IPOs go the best direction either, so it's kind of hit or miss of how you anticipate what the market is going to take it. And it's also going to be dependent to Twitter to generate revenues in the future. The people that bought that stock, if they're doing their homework, they're looking at the potential cash flows and saying, yeah, Twitter should be valued at this much because this is the potential profit they're going to generate in the future. So with that, what ties in kind of with Chapter 11, it looks like how all these cash flows are predicted, generated, and also a little bit about the what ifs. They talk about scenario analysis and sensitivity analysis, because you just can't go in and say you were a movie producer or you had an idea for a movie. If I go in and say this is going to be a guaranteed blockbuster, well, Hollywood knows that that doesn't always work that way. You may think it's a great idea, but maybe the market in the United States didn't like the idea at all. So you have to be willing to go in there and be fairly confident that this movie is going to work, but also analyze all the rest of the what ifs of what could happen. So, well, do email me if you have any questions this week. We wrap up week 4, and we're already halfway done with the course. The following week, we're going to have our second exam. But keep working on that project, work on your homework, send me an email if you have any questions. I'm going to post some examples on Monday morning for calculations relative to chapters 10 and 11. But otherwise, enjoy the rest of the weekend, and we'll talk to you next week online.